Welcome back to Trading 360. I'm Nicole Petalides, live in New York City. Thanks for being with us. It's time for the big three stocks, three charts, three trades. Ben Lichtenstein will take us through the charts. Here to take us through the trades is Scott Bauer, CEO of Prosper Trading Academy. So glad you're both with us. So you're trying to take a look here at the world of cybersecurity, looking at Palo Alto, but while everybody's jumping in, you're being a little contrarian, aren't you? Scott, tell us a little more about that.
I definitely am, Nicole. And, they had their earnings release a couple days ago, and it was pretty good. And like you just said, I mean, cybersecurity now are the buzzwords in the market, given what's going on geopolitically right now. Everybody is running in here. Palo Alto is running to the upside. There's so much what I would call FOMO to get into this space right now. And I just think it's due for a pullback. I think it is way overbought. I'm not saying that Palo Alto or any of the other cybersecurities are not a good investment going forward, but I'm a trader. I'm not an investor. So I think this is overbought, and I'm going to buy a put spread. March expiration gives me about 3 weeks. I'm buying the 510, 500 put spread. I'm paying about $3 for that. Just looking for a pullback. Now, Palo Alto does not have to go down all the way to 500 for me to make money on this. It can just pull back, 5% or so. It doesn't have to go all the way down. Again, I just think it's overbought in the short run right now.
Understood. I mean, today is the best day of the month for the Dow. It shows the, volatility we've been seeing in some of the, just that overbought feeling. For example, on Palo Alto, Ben, it's up 14% this week. That's a big move.
Yeah, Scott, Nicole, good morning. Scott mentioned it's been on the run to the upside. I'd argue it's been sprinting to the upside. It spiked up yesterday from that 460 level, or recently up to, again, 460, right, or 560 roughly, so about $100 to the upside. And, as I look at it, there's a couple things that come to mind. First and foremost, we've got 3 names today that we're going to take a look at that held above the January lows in the recent selling, and with the broader market, the NASDAQ, the Dow, the Russell, and the ES taking out those January lows, short-lived albeit, but again, they did take them out. Any stocks that haven't managed to do so, I think, again, it's kind of a reflection of how investors are kind of leaning on some of these individual names, and here's one that's done well for them for the most part. Now, the other thing that comes to mind when I look at this is we've been very much range bound, so I think oftentimes this can be a little bit discouraging for traders, but don't let it get to you. Just take a glass half full kind of approach to it, and notice you've got a well-defined upper extreme and a well-defined lower extreme. And we always talk about these areas of balance as well. When you fail at a lower extreme, again, didn't take out the January low, spikes up and through the middle of this range, 510, 520, 530 with energy, lends itself to the retest of the upper extreme, again, 572, and that's what we're seeing. Now, as we move away from the intraday look, that hourly, you can see this area of consolidation that's been forming, well-defined migration of value to the upside, that value area that formed around 235. We're talking about April, May, June, and into the fall of 2020. We spiked up through 320. We formed value around 350, and now it's just forming 500, 525. So until we break out, it's kind of limited in terms of real directional conviction, and I think that sort of feeds into Scott's sort of mindset in this one, because it's going to take something to conviction to get us up and through that 572 level. That breaking through the middle offers up and lending itself for a retest of that upper level. Now, I do want to point out, holding above the 200-day moving average, this is that purple line. We're now back above the 50-day moving average, and look at this, RSI does lend itself for some potential to the upside, or for it just to continue to chop in this area again, which could support Scott's sentiment on this one. We've seen a bit of a volume spike come into play, but yeah, I mean, this one, again, the upper extreme 572, you've got that lower extreme, that 200-day moving average to keep an eye on. So again, fairly well-defined range right now, and through the middle, offering up a retest of that top.
Yeah, when we see that consolidation that you were talking about, Ben, I mean, that's really evident. And then you see the big wide range of this week, right, Scott? I mean, this is why you're saying it doesn't have to go all the way back down, right? Just a little and you make some money. Final thoughts on this one?
You're exactly right, Nicole. And in the range that we saw from really just post-earnings to the big market sell-off and then the reversal, and now where it's at, yeah, I just need this to come back pretty much to the middle of that range, and this is going to work out.
Yeah, understood. Okay, let's get to Rivian. And you think you're looking for some sort of breakout. Week to date, it's down about 6.5%. Obviously, this was a darling during the IPO, but it has since pulled back greatly. Tell me a little bit about Rivian and why this one's on your radar.
Absolutely. And, this is a stock much like Tesla, some of the others that are out there that are very news driven based on energy policy. And I just think that the range that this stock has been trading in recently, roughly 57 to 65, and it's been holding that range very, very well here. It looks to me like it wants to break out to the upside. The stock did not break down below that range, kind of like Tesla did. So I really think there's still a lot of momentum to the upside here. I'm looking for that breakout above 65, and I'm going to buy a pretty aggressive April call spread. Aggressive meaning $10 wide, well above where the stock is right now. I'm buying the April 14th expiration, 70-80 call spread, $10 wide. I'm trying to get that for about $2.50. I think the reward to risk on that is really, really nice. And if it does break out, the market maker expected move suggests that we could hit 75, 77 to the upside.
I'm sensing your optimism, particularly when you say really, really nice, right, Ben? What do you think, Ben, when you take a look at this Rivian chart?
Well, I think similarly to what we were just talking about in terms of Palo Alto, we're in a similar kind of sideways consolidation sort of pattern. This one has been trending to the downside, though, so almost the exact opposite, but no indication of any rejection of these lower levels yet. So again, I can see Scott's optimism. He's looking for a breakout here, but what I'm noticing again is still just continued weakness and no indication that that's changed. You guys know when I get into something after it bottoms out, I look for it to kind of take out some of these areas of consolidation that formed on the way down. Again, at this point, we're basically just sideways right around the 64 level. Take a step back here, though, and also let me point out, again, here's that low from January, as I mentioned. Again, we were unable to take that out in a similar pattern in terms of what we were just talking about with PA&W, but you can see again here on the move, off that lower level, held the Jan lows recently, so I think that's important. It shows investors' willingness to stay with shares here in terms of ticker symbol RIVN, and well, you can see the daily time frame, some of the price decay that's come into play. We don't have a lot of data to use since the IPO in terms of this one, but I did look at where things stand. They're holding below the 50-day moving average. The RSI is kind of right in the middle, which is sort of lends itself to more of this kind of chop sideways consolidation. But Scott, we could get a breakout here. If we do, it'd be somewhat counter trend. I'd be looking for energy to the upside and follow through with that. We'd be talking about participation, good volume to come into play, for example. But I agree with what Scott said in terms of Tesla. I looked at Tesla while after he mentioned that name. It took out the Jan lows in a big way. I mean, that was one of those shares. Again, we've got 3 today that held above the Jan lows, but the broader market, for the most part, took them out.
Yeah, and to your point now, we had on Garrett Nelson yesterday, the analyst, and he liked Rivian. He also liked Tesla, and he liked Ford. What he took a backseat on, he had been touting Lucid, but after a big run and pullback, he's taking a hold on that one. So he still likes Rivian, particularly now that it's sold off. So final thoughts here on Rivian before we get to good old Costco. Scott?
Yeah, again, this type of call spread gives me fantastic reward to risk. I have limited risk. I know, if the stock doesn't break out or if it moves back to the downside, I know what my risk is, but it's got phenomenal reward to risk to the upside.
Okay. Now, last but not least, Costco, the December high was 571, had some good sales numbers that were up 16%, but the stock did not represent the good quarter that we did see from Costco. So what are your thoughts here on this one?
Yeah, and I think it's got to catch up a little bit, Nicole. And, I sent this trade to you guys, I don't know, it was probably about 30 minutes ago, just prior to the stock really moving up. And I love this stock ahead of earnings because even on a sell-off, even if there is a sell-off on earnings because guidance is not good or metrics are not good, I love this stock on a pullback. So what I'm doing is I'm not necessarily playing the upside ahead of earnings, but what I'm doing is I'm selling a put spread. So I'm collecting credit on a potential downside move. And if the stock does move down, I am willing to buy the stock. So that's why I'm selling the March 18th expiration, 490, 480 put spread. I can collect about $3 or so. Actually, it's probably a little less right now because the stock has moved up. But again, on a trade like this, if earnings come out and guidance or metrics, whatever it is, pull the stock lower, the break even on this is 487. I am a buyer in Costco at 487. I want to buy the stock there. That's why I really like this type of setup.
Okay. So, I mean, what do you think here, Ben, as you take a look at this one?
I think with some of the price activity we've seen in Costco and the other shares we were just talking about in terms of the range bound, the rotational type, limited directional conviction type activity, I think it's a very good possibility Scott gets that level he was just looking for, again, that 47 level. Now, let's take a look at shares and the hourly time frame first, the price activity and how basically we ran it up from 448 the end of October, middle to end of October, 450 level all the way up to 571, and then since then you can see kind of range bound. Now we talked about the other two names in terms of how once you get through the middle of that range after a failed lower extreme where you could open up a door for retest of the top, they failed to get through the middle up and through 530, 540 with energy on Costco. So look what happens, as Scott just mentioned, you roll back over. I think again there's a good possibility for some contained type rotational trade here. Stepping away from the hourly time frame does show a really well-defined trend environment to the upside. It also shows again here, as I mentioned, another one of those stocks where the January low held in terms of the recent sell-off, which just shows investors' willingness to move into a name like this or less out of a name like this amidst some of the broader market sell-off. It also held above a key area around this 450 level, that last sort of area of consolidation that formed. So I think there's a good possibility for us to just see some range-bound consolidation type trade, 571, 572-ish to the upside, 470 to the downside. A quick look at some of the moving averages and where things stand. It's kind of right in the middle above the 200. That's the purple line, below the 50, which again sort of lends itself to that rotational sort of chop type trade. Look at the RSI, kind of similar pattern, right in the middle, nothing really providing one lean one way or the other. And then even volume's been somewhat limited as we're just kind of in this sideways phase here. So again, for the bulls, the longer term trade, this is very supportive of the move up here. It's again, it's value forming at a new higher level, and we like to see that in terms of the trend to the upside. And at this point, though, we've got a well-defined lower extreme, well-defined upper extreme to look for a breakout. But as Scott mentioned, we could see, again, a little bit of chop here within that range.
Wow. Yeah. And, you know, as we look at that, you know, the final thoughts here, Scott, as we've had this wild week. I mean, Apple is still down for the week. Some of the major averages are testing the flat line. In the end, I mean, you expect volatility to continue, but as a trader, what are you watching for day in and day out?
What I'm really watching for is how the VIX is traded in comparison to how the overall market is traded. So earlier this week, the VIX was way too low in comparison to the intraday moves that we were getting in the marketplace. The VIX was, you know, suggesting intraday moves of about 1%, maybe a little bit over that, and we were seeing 2% plus daily moves. Something had to come back in line. Either the market had to start calming down or the VIX had to spike up, which it did. Mm-hmm. And once the VIX spiked up, that was, I wouldn't say a capitulation, but somewhat of a, okay, we're now back to in line. Now that the VIX is back down to where it was just last week, even the week before, I think we're going to start to see the market calming back down, and we're not going to see these 2% plus intraday moves.
All right. Thank you both very, very much. Wonderful to see you both. Thank you for the big three today, looking at Palo Alto, Rivian, and Costco. Scott Bauer, Prosper Trading Academy, and Ben Lichtenstein. Thank you very much for the big three on this Friday. Appreciate it.
Thank you.